when we started off early days, I still remember, the first, every single transaction we would know, and it was about convincing the customer, and so many people were like, are you for real? I mean, really, you're going to ship jewelry out? How are you going to do it? How is that going to happen? All of those questions used to come all the time to us. Now, of course, everyone's used to it, and you see things a lot more differently. We've clocked really high value transactions. Every month we have 50 lakh rupee transaction happening without much of a problem. People pay us and do it because they see value in what they're buying, as opposed to what if they were going to buy the same thing offline.
Well, that was a very young Mithun Sacheti talking to us on Young Turks in 2012 about CaratLane's early days and his relentless pursuit of customers' trust. Cut to 2023, Sacheti has made history by making one of the most remarkable exits ever seen in the Indian consumer internet space. This feat was accomplished through the sale of his 27% stake to the Tata Group's watch and jewellery maker Titan for a whopping 4,621 crore rupees. That values the jewellery platform at 17,000 crores. Well, to give you a short history of CaratLane, in 2008, Mithun Sacheti co-founded the online jewellery retail platform alongside Srinivasa Gopalan. Embedded in Sacheti's journey is his family's connection to Mumbai's renowned jewellery establishment, the Jaipur Gems. In 2016, he scored Tata Group's entry into CaratLane as a shareholder, and this strategic maneuver followed a transaction where Titan acquired a 62% stake from New York-based investment giant Tiger Global, valuing the startup at 536 crores. Between 2016 and 2019, Titan bought shares of the omni-channel retailer in tranches, taking the total stake to a little over 72%, mainly through the secondary purchase from Tiger Global, the only venture investor in CaratLane. In 2018, after dinner with the legendary investor Rakesh Jhunjhunwala, Sacheti decided to buy out his co-founder Srinivasa Gopala and then double down on his business that helped CaratLane grow exponentially. Hello and welcome to this special edition of Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen Bhan, and before I bring Mithun into the conversation, let's hear out from Titan on the CaratLane acquisition.
We see from Titan point of view, it's a multi-decadal opportunity of value creation. And that is what the primary motivation for us to kind of increase our stake at this point of time. As far as this deal is concerned, our balance sheet is pretty healthy. We have a good cash position, but we are going to do part debt funding for this deal. And we are working towards that. And by the time deal comes to closure in next 2 months kind of horizon, we should be ready with our financing plan. CaratLane is largely diamond jewelry business. So the opportunity to keep inching up margin and gradually not only equal Titan jewelry portfolio margin, but be slightly better than that exists. We talk about that our jewelry business with respect to jewelry industry in India is current 7% market share and will go towards 10% by FY27. CaratLane similarly within Titan jewelry portfolio sits at about 6-7%, and they should go towards 10% by FY27. So certainly they need to grow, and in our expectation, they will continue to grow faster than rest of the portfolio. There is no immediate plan, and I don't think we are even considering listing. We will rather run a portfolio of brands for our jewelry business, and it doesn't make sense to us to have two listed entities in the same space.
Well, that is Titan on the CaratLane acquisition. No listing plans yet. And yes, Titan has assigned a value of 17,000 crore rupees to this omni-channel retail jeweler, an astounding 30-fold surge in mere 7 years. And joining me now to talk about his journey and the road ahead is Mithun Sacheti, the founder and MD of CaratLane. Mithun, many thanks for joining us here on Young Turks, and congratulations on a deal that everyone is talking about. You know, we played out that clip of yours from 2012 when you were on Young Turks, Mithun, and you said the number one question that you were asked was, is this for real? And I guess post this acquisition done by Titan, the question everyone is asking, is this for real? But that's more to do with the valuation at which the deal has gotten done. Mithun, your first comments on how you feel today.
It's bittersweet. Ideally, if I could, I'm a kid of this industry and I'd love to build it for a very long time. And while the money is what the money is, and the money was anyways invested in the business the way I would think about it, but there could not be a better home than Titan for this. And the capital market speaks for that. The culture of Titan speaks for that. The Tata speak for that. And I am happy for CaratLane that it's found its home. And I do believe that it's just, in the life cycle of jewelry businesses, which run about 100 to 300 years, it's only 15 years old. So there's a massive headway from this point on.
Yeah, you said that this is the best home that CaratLane could have found for itself. But what about the timing of the exit, Mithun? And, I would imagine that it would have been an inevitability considering the fact that Titan already held 72%, starting its first investment in the company in 2016. But why now?
Rakesh and me would speak about this often, about both timing as well as value. My intent would have been to drive it so fast and so high that someday the dynamics play out in such a manner that we go to an IPO and that sort of solves it. But it didn't happen. They had an option and they chose to exercise the option, and that's why now. No other reason, because I think in their minds they're also clear if they don't want to take it to an IPO, then this is just going to get more and more expensive as time goes by. It's been on a 50% plus CAGR. It's profitable. In some of parts, it shows a lot more value as well. So I understand the reasoning for the decision which they made, but I'm grateful to the partnership I've had with them. They've been an excellent partner, and sometimes in partnerships you got to give way to your partners just because it's the right thing to do, and there's no point creating friction around it.
No, I understand that, but that's what I want to understand from you, because I think that this is a dilemma that many founders will face or perhaps are grappling with even today. How do you decide when to sort of pull back, how much to pull back? And I would imagine that you were preparing yourself for this moment starting 2016. Take me through what that's been like, this process of detaching yourself from something that you created.
Shereen, I can never detach from myself from CaratLane. I don't think it'll ever happen. The process, though, to be honest, only in 2020 I started thinking about that. While we did have a put and call option in place, but there was more for an eventuality in case we don't get along and we're not happy with each other or something like that. But and there was always a possibility that maybe we could do an IPO. And then when that possibility became bleak is when the other conversations around it started, that maybe then it comes. Then it becomes about timing and everything else. And I have had such an unbelievable relationship with Bhaskar and with the support of Rakesh, who's been their large shareholder as well, and a good mentor to me to think about it. The three of us sort of got a good sense of it. And then along with that, Mr. Tata and Venkat all got together and sort of decided that now might be the time for it.
So, Mithun, as you pointed out, that this became a reality, so to speak, in 2020 with the possibility of CaratLane IPOing becoming bleaker. Why was that the case? I mean, we just heard from the Titan management as well that they're not looking at an IPO. But is that a regret that you have? Would you have liked to see CaratLane IPO? And why was that the final consideration on the part of Titan and the Tatas?
Yes, of course. Like any founder, it's the Oscar for us, right? We would love to see the IPO. There's no doubt in my mind about that. But I understand from their viewpoint, they don't want to have two listed businesses in the jewelry space with two different sets of shareholders. I think it's going to create a lot of conflict for them, and managing that might become more challenging as well also. So while the brands are very distinguished, Tanishq and CaratLane, but I do feel that it could become increasingly painful for them to manage that. And so from that perspective, they're very clear that, and Tata Group overall also has a strategy where they want to consolidate more. And many things were sort of roadblocks in making this decision happen.
Mithun, before I talk to you about what's next for you, let me get you to walk us through how you think that the D2C space has changed from the time that you started CaratLane in 2008, when there were questions on whether this would actually be real. Could you actually sell online jewelry online, to where you find yourself today? What have been the structural changes? What have been the consumer shifts that you believe have resulted in this 50% CAGR growth for the company?
Shereen, actually, when we started out, we didn't have a clue so much about it. So how are we going to build? We we had this idea, and we believe that looking at the time people are spending on the internet, that internet is going to be the place where a lot more stuff happens. The time spent kept expanding, but the conversion rates in the business were not expanding. So there was a need there was a tactile need. People wanted to touch and feel jewelry and figure it out. We tried that through Try at Home, and we saw a great success. But we realized it's not a scalable model. Nobody can scale Try at Home that way. So we decided that stores are the right way. But the only way stores work for low ASP jewelry is when everything else, which is about finding the jewelry, designing it, everything else, making the customer choose all this, happens in his house or in his cell phone. So when that model played out in 2014 is when we knew that this is the future of this space. And then after that, there was no holding back. Our store in Bangalore in 2014 opened up. It was a remarkable success. The first two were failures. The third one was a big success. Twice on Sundays, we had to close down the shutters. It was a 400 square foot store, completely redesigned, very different from anything jewelry ever had. And then from that point on, it was about building this out. And when we were thinking about building out, we felt that Titan was the best partner. We had Tiger Global as an investor, but their view obviously was a lot more tech than Omni at that point. Frankly, we didn't know the word Omni either. We used to call it all kinds of things, clicks to bricks and clicks to mortar and I don't know what not. And then some smart guy came up with the word Omni, and then we sort of built this. And I do believe that CaratLane sort of is a silent player of Omni, but possibly the most dominant player in the way Omni plays out.
Yes, we've seen many of those buzzwords take shape, and Omni is one of them, which is now what every D2C company is part of every D2C company's strategy. But Mithun, I want to go back to building out. And your strategy to building out was also very different in the last few years from the time that you decided to start up in 2008, and largely led by the conversations that you had with Rakesh Jhunjhunwala, someone you've referenced several times in the course of this conversation as well. And, Rakesh was very clear, I'm not interested or invested in loss-making companies. And that, in a way, also changed your approach to how you were going to build this business out, didn't it?
100%. So, I had a chance meeting with him. I requested for a time with him through through his niece, and I went to see him in Bombay. And I couldn't hold his attention for like 30 seconds. It was after market hours, and right through that, I couldn't hold his attention because he had this strong view that loss-making businesses like us don't deserve the value that we were getting. And Titan was acquiring while he respects, and he knows that Bhaskar's a visionary and it'll play out, but he was not happy with me for building a loss-making business. That relationship evolved as time went by. And in 2018, when I tried to raise about 100 crores, which is the only primary capital that Titan put in, I was a little disappointed with the value at that point. I went to him and said, look, I don't know what am I doing? And I don't know what am I doing right. And he, along with a couple of other people, friends of his were over that day. He had, I think he had Ramdev Agarwal, and he had Ramesh Damani and Utpal Sheth who were there. All of them spoke about compounding, and they spoke about what is the right way to compound. And while they were speaking about these things, not directly to me, I took that to heart. And I realized that my biggest gap was that I obsessed too much about my P&L, and I've had very low obsession on my cash flow. And the reason most of us have very low obsession about our cash flow is we'll keep looking at our VCs for funding us. When you decide that you're never going to have money, that you're never going to raise money, and your business has to fund you, you redo and you sort of rework your cash flow situation. And that sort of was a big turning point for me. And the buzzword of cash flow caught on to me at that point. And everybody in CaratLane will tell you we talk about it all the time now. We run sessions for people across who understand how cash impacts the business. And the P&L actually is just a report card. Everything else that we do is basis of cash. And that changed our trajectory, the way we opened. We opened 20 stores a year because that's all the cash we had. And last year we opened 80 because we had that much more cash coming. We went into franchising, which Titan was best at, and we learned from them, and we sort of built it even one step further than that. We went to our vendors and worked on that differently as well. So cash became king for us, and cash led to profitability. But all of this started with those conversations.
That's a very important lesson that you learned in your journey. And I think that a lot of D2C founders and startup founders are learning, perhaps in a difficult way at this point in time. But it's an important lesson. Be obsessed not just with P&L, but be obsessed with cash flow. And on that, I want to talk to you about some of the other important realizations along the way, Mithun. And, what we're seeing at this point in time, as you said, the ecosystem has gotten used to the fact that there was this easy money that was available because interest rates in the US were at 0 for the longest time. And now with rates at 6%, there is no easy money coming your way. So, I remember a CEO telling me once that you can't just have an approach where you save yourself out of trouble. You have to sell yourself out of trouble. So what have been the other realizations on dealing with the changes that we are now seeing, whether, you talk about funding or valuations?
I think everybody is realizing that right now. And I think the best capital, which teaches you that early enough, is Indian capital. Because capital cost in India is always going to be high. And the questions they'll ask are also going to be very different as well. The capital that comes from abroad oftentimes doesn't have a landscape view of what is going on in India, and which is why we are building with the wrong advice many times. I'll give you my own example. With Tiger Global, when we were there, they never said that. But we were looking to compete with the other portfolio companies. And we were trying to figure out growth, looking to compete with Myntra or, definitely not Flipkart. They were way too large and growing too fast. But the other portfolio companies which were there. And we were not a horizontal play. We were a vertical play. And we are a slow vertical play. We had to understand that it's going to take longer to build our business as opposed to somebody else's. So frankly, that 400 crores that we totally took in as primary capital, and 300 out of that from Tiger, 150 we could have done without spending that had we just been smarter. And I think that realization now is coming to everybody. These conversations are happening everywhere, and the ease of money going away is actually a great thing for entrepreneurship. People are going to build a lot more meaningful businesses because the froth is gone. And the thing about money is it's also, while it's life's biggest luxury, it's also life's biggest corrupting agent.
Yes, it can be. It certainly can be. And we're seeing a lot of perhaps some of those bad behaviors that were learnt on account of the easy money being unlearned at this point in time, hopefully being unlearned at this point in time. But Mithun, let's talk about the D2C business. And so much has changed. We've seen an explosion of D2C businesses across different categories, creating new categories in many ways as well. We've seen a plethora of acquisitions by FMCG companies within the D2C space. Yours, of course, is the big one. How have you seen the D2C space change, and what would your message really be to somebody who has started a brand, who started a D2C business today in this environment?
Let me break your question into two parts. The first part is about the D2C founders and how they should think about it. Look, for marketing, really up to, I think up to like 5 lakh customers, you really don't even need to go anywhere other than digital. People need to understand that the channel is deep enough to get awareness and to be able to drive every kind of recognition you want for your brand over there. So going on television, going on newspapers adds no value. If you're not delivering on digital, it's only because the ad is not related. I mean, the consumers are not relating to what you're doing. So I think that realization is very important, and enough people are nowadays figuring that out. What they oftentimes don't figure out is what is the tactile need of the category and what is the tactile need of the business? How big is the distribution on the offline side going to be? And don't think digital means digital is where you attract people. It doesn't necessarily mean that everybody is going to consume over there. Take globally, at Amazon's at 7%, if I'm not mistaken, in America, in terms of the categories they play, they're at about 7% market share. Tipping Point, the book describes at 14% where the world adopts to something completely. So even there, it's not happened. So to think of that in India and say, this is the only way I'm going to do it, I think it's a bad idea. Now, coming to the strategics, the challenge in strategic relationships is that most strategics don't build a partnership the way Titan built with us. You have to think that somebody here is building and bringing something else. And I feel that, I'm going to borrow C.K. Prahlad's famous line where he speaks about saying that don't focus on best practices, also focus on next practices. And it's, to me, Strategics bring you best practices, and the entrepreneur is the X factor that brings you the next practice in that. And the combination of this, if led to come out, if it comes out in full flow, there's something else there's magic that happens at the end of it. If Titan told me, 2 years later, if you perform this much, you're going to get this exit and this multiple on that, I don't think we would have been where we are today, both with the business and with the outcome as well. But they said, let's go with it. We are partners. Not for one day did they make me feel that they are not a part of this journey, or we are not 100% owned subsidiary of this. That openness, strategics don't have it most times. If they change their mind to doing something like this, I think the entrepreneur, D2C entrepreneur plus strategic journey is going to explode, and you'll build some incredible businesses in India.
Yeah, I would imagine that could perhaps be the case. There are plenty of exciting opportunities at this point in time. And as you pointed out, because of the environment, we're also likely to see more consolidation take place. But Mithun, as a founder, as someone who's built this company out, who's someone who learned to engage with a strategic and learned to sort of create this partnership, as an entrepreneur, what have been the biggest lessons? I mean, you talked about, the change in approach as far as strategy was concerned. But as an entrepreneur and as a founder, dealing with the strategic, what did you have to change about yourself, about your leadership style, about your leadership mantra as you went about that?
A few things, Shereen. We took a deep, we took a deep breath, and we sort of went underwater almost for 5 years, right? Because strategics don't like you to be that visible. And so that's very important. You must reflect on that and sort of act in that manner as well also. Personalities clash, and that's something you have to manage first. Second, they add a lot of value. You must have a lot of respect for that value that they bring in. In our case, the balance sheet was a lot of value. And I remember, when we were looking for trust to build our brand building, Bhaskar gave us this line where he said, like, Tata is the gold standard of trust, but Tanishq is the gold standard of trust in jewelry. And so we got that tagline from there and sort of build that. So that wisdom is very important. They might not be 1/4 as savvy as we were digital, but consumer-wise, a lot of them are significantly far ahead of what we do. And I think those are very important lessons to take away. Second, don't do anything that conflicts with their interest. At most times, you have to avoid that and talk about conflicts very early. Don't let it become a big problem and then deal with it. For CaratLane and Tanishq, there are natural conflicts in some areas as well. But we've spoken about it all the time, and there are 1 or 2 we don't solve, but then we sort of leave that, because at least as long as you can solve 8 out of 10, you're fine with it. And for a strategic, as long as you're demonstrating enough confidence in what you're doing, and as long as you're growing, I don't think a strategic wants to come in and own you at that point, because they're getting a free ride, and there's no reason why they're going to change that part. But founders need to understand that as well also, that you earn the free ride. It doesn't come any other way.
No, it doesn't. And I think that's a very important point that you made, that, you need to communicate, you need to be consistent in communicating, and you need to make sure that you have the terms of engagement in place in dealing with issues of conflict or potential conflict, as you pointed out. And there will be those even in a partnership. I mean, it happens in any kind of relationship, so why should this be any different? But Mithun, what next now? Where do you go from here? I know you said that you want to take a little bit of a pause before you decide on the next chapter, but initial thoughts on what you would like to dabble with. What would you like to do?
Well, most of last year we were thinking about investing is the way, because I've really enjoyed doing that all throughout. Early stage investing is something we did a lot of. So that's something definitely on the cards. But I do feel I have a reasonably good understanding of Omni, and I think that knowledge can be compounded by looking at businesses where we can come in and sort of help them with our understanding, and hopefully if they're interested, then work together and sort of partner with them. It's just, this all has to sink in. Need a couple of, maybe a month or 2 to spend time at home. 15 years as a founder is a long time, and you sort of neglect a lot around your family. They face the brunt of this. So we've got to deal with all that right now.
Yes, I would imagine, and it's a well-deserved break as well, Mithun. But you know what kind of a war chest are we talking about that you intend to deploy, that you intend to leverage, and what looks exciting to you? As I pointed out, in the D2C space, beauty, personal care, health, wellness, nutrition, jewelry, of course, which I don't believe that you're going to go down that road again. But what looks exciting to you today?
Well, today, frankly, beauty and personal care is great, but I don't understand it very well. I'm trying to understand it. I see a lot of action in this space. And it's like the stock market, right? When you see consensus somewhere, that's what you stay away from. And so I feel that about BPC right now. But I find new categories, new players in consumer happening everywhere. I love Bombay Shirt Company. It's great business. I don't know whether he'll ever allow me to work with him. But those kind of businesses, I love the luggage space. I think Indians are traveling a lot more now, and I would love to see some action over there. I want to find these categories which are difficult to do, and then the opportunity plays out, because the beauty of a war chest of your own is that it's patient capital. A lot of other people are not going to do that. And India solves for its own problems, and I strongly believe that. So we don't have to look at the West and try and figure out what model worked there and do the same thing over here. We got to solve for the changing behavior of India and look for opportunities in that.
Yes, I would imagine, and there's plenty that is changing. But if Akshay Narvekar is listening to Mithun Sacheti here on Young Turks, he's interested in the Bombay Shirt Company. And if something were to happen, you heard it first here on Young Turks. But Mithun, finally, before I let you go, as you said that in many ways it can be a lonely journey as a founder and a CEO as you build out a business, and very often it is the personal side that bears the brunt of building out. What's been the mechanism of coping with that? And I get asked this question very often about finding balance between personal and professional, and I don't know if you can, but what's been your mantra?
I actually think there's no such thing as work-life balance for founders. I think there's work-life integration. And so my co-founder, when he comes to Chennai, he lives at home with me. My friends are a part of it. I love to work with each other. I love having dinners where they are also a part of it. So for me, integration is the best way that it's worked, and I've enjoyed that thoroughly. I've never felt tired at a day of work, and I think my family's been able to adjust to it because of the integration. I don't see any other way I would have survived that. When I used to do it all by myself and compartmentalize things, I would make a mess of it, and I'd make a mess of my mental health as well also. But once I moved away from that and started doing this, and I think I learned that really from the strategic investment as well, because you start seeing how people are with their lives and how they manage things as well. There's a lot of wisdom over there, and we think we are smart, but really they do it a lot better.
Well, you've done well for yourself, Mithun. Once again, congratulations. And I have to say, I've thoroughly enjoyed our conversation. And it was great having you on Young Turks way back in 2012. And it's great to have you back here as you talk about one of India's largest exits in the D2C space. We wish you the very best of luck. And I hope that when you're ready to talk about it, you will do so here on the program. But it's been an absolute pleasure. Thanks very much for joining us today.
Thank you so much. Thank you. Thanks a lot.
With that, it is time for us to wrap up this edition of Young Turks from all of us here on the team. For now, goodbye. Thanks for watching.